I hope that all of you are doing great. Well, yesterday there was a Fed meeting and a lot of people were looking at it, basically waiting for the hawkish or the dovish statement from the Fed. And guess what? The comments were not anything to do with specific statements with the amount of rate they would want to increase or stuff, but overall the comments were considered hawkish. Why? Because they said the Fed is going to do everything possible to curb the inflation. Now, this gives the signal probably they are going to go to any extent in order to control the inflation. That means inflation control mechanism or means or measures will be taken in the future as well. Now, I believe that if they would have specifically stated they are going to raise the rates by 75 basis points or 50 basis points, 50 basis points would have been bullish. Why? Because the last two raises have been 75 basis point. But when a dark cloud is given by the statement, that means there is no certainty what is going to happen next. That's when it is considered far more bearish, and that is the reason the Bitcoin plunged, and right now it is hovering around $20,200. And not just the Bitcoin, even the S&P 500. I mean, as it's written over here, as you can see within the chart, before the meeting the price jumped up to $21,900 approximately, and right during the meeting and after the meeting the price started plunging, and by now it is $21,200. It is hovering around, and it touched below $20,000, and the altcoins got wrecked based on that. And the S&P 500 also dropped more than 2%. So overall, it became quite not a good news for the entire crypto market, but that is how it is. But the RSI is highly oversold, even on the daily, at the 4 hourly, at the 1 hourly. So probably we can expect a little bit of relief bounce until we start forming a higher high and higher low, so that we expect further leg up for the Bitcoin. Now let's come on to the second part of this video. This is quite an important thing. Why? Because I mean, billions of dollars overall has been lost by the people, by the crypto community, due to the Ponzi schemes, due to the pumps and dumps. So what are the things that you need to be cautious of? And at least as a general viewpoint, these are the things that you should be taking note of when you're trying to invest somewhere, even in cryptocurrency or anywhere else. By the way, the Ponzi scheme came from the name, I mean, the guy Charles Ponzi in early of 1900th century started a scheme where he lured investors to invest the money so that he is going to double their money within the next 90 days. And guess what? The first set of investors actually got the money, and the money got doubled. I mean, they genuinely got their money back. That's when it attracted the big sort of investors, and during those times like $20 million was raised, and that's when the fraud happened. The guy ran away with everything. That's how the scheme of things known as, I mean, coming from the name Charles Ponzi scheme. So what are the things that you need to be cautious of? Apart from the Celsius network, probably it was not a Ponzi scheme, but still, I mean, if Celsius and things like Luna can collapse, things like Celsius can collapse, definitely we need to be cautious of the projects which already have the malintentions. Now, how to spot the crypto Ponzi scheme? Number first red flag you need to be watching is promises of ridiculously high returns. Some of the coins, some of the like staking reward, some of them are like, okay, you buy this token, you submit it, and you are going to get 1,000%. That means 10x every month, something like that. Something as crazy as that sounds so ridiculous that people are like, okay, let's just give it a shot. Let's try the YOLO mechanism. You live only once thing, and if you make it, you are going to make it big. Definitely do not go for it as a principle. Apart from the crypto, anywhere, if you're getting ridiculously high promises, that is not healthy. That is not sustainable model. Somewhere or the other there is a loophole which is going to crash all your investment. The next one is unregistered investment projects. Now the crypto industry entirely is unregulated right now, but at the same time, like, some of the projects you can consider it as a genuine one. For example, let's say there is a Polygon or Matic. I mean, these are the coins, the kind of a coins. I mean, even though it plunged down badly, it went till 32 cents, and right now, like after that, it rallied 300% after all the partnership with Instagram and stuff. But these are the kind of things, probably, I mean, within the altcoin coin category, definitely Bitcoin and Ethereum, we all put our trust in. But within the altcoin thing, I mean, you need to be watching for these kind of things. For example, another coin, the BNB, right? These are the things which are pretty much not registered formally, but pretty much the stakes are very, very high. So when we are risking, we should be risking into something which is highly less risky, and the reward is pretty high. Now the next category of the crypto coins could be the DeFi's, or some of the coins which are solving the real world problems, like which I've already stated onto our channel, and they are already in existence from couple of years. I mean, yes, that should also be a red flag that, okay, suddenly the coin is pumping and then it just started probably 4 or 5 months back, however promising it is. I mean, unless until you have a track record of these, and you personally know the inside story and you're willing to risk, you should be doing the risk management properly until then. So unregistered investment projects, I mean, you can classify what could be those. Now the next one, the next red flag could be use of the sophisticated investment strategies. Some of the companies actually tell you, okay, they are going to give you probably 100% yield per month, or something like per year, or 300%, as I already showed you, like, I mean, told you regarding the high unexpected yield returns. But then they also promise that, okay, they are going to have such a investment tactics, such a investment strategies where they are going to make so much of the money. I mean, you need to be cautious of the things should be sustainable. I mean, maybe they are just using it as a marketing gimmick. For example, one of the Ponzi could be the BitConnect Ponzi that was unveiled in 2016 as an example of Ponzi scheme that utilized this tactic to trick investors. Operators encourage investors to buy BitConnect coins and lock them onto the platform to allow its sophisticated lending software to trade the funds. The platform claimed to provide monthly yields of up to 120% per year. Again, it did not result or end up well. The next red flag would be high level of centralization. The whole concept of the crypto, or where we all talk good about the crypto, is the decentralization, where nobody as a central authority controls everything. I mean, it is controlled by the community. The prices are controlled by the community. But at the same time, we need to be cautious of looking where the centralization could be there. For example, let's say you're trying to invest into a crypto project, and then you see more than 70% of the tokens are held by one particular address, or probably, let's say, the community itself. So you need to be cautious enough and trusting the community enough in order to be sure that you are going to make significant sum of, I mean, you are not risking it as a centralization scam. One of the examples of this is one coin which was very famous, and it was a pyramid scheme from 2014 to 2019, and during those 5 years it defrauded investors of $5 billion. It was pretty famous. In fact, a lot of big names were involved into it. Like, they fell for it. Nobody was ready to believe that it's a scam, but eventually everything broken down, and these are the things that we need to be cautious of. Now the next one, multi-level marketing in itself probably is one of the business model, and not all of them are fraud, but generally when you see the similar mechanism used in an unregulated space, where probably the investors below, I mean, the new recruits are further pushed to hire furthermore new recruits, and everyone is earning at the top from the bottom. That means the new recruits will be earning if they further hire the new recruits or market the new recruits. So it is more than the value generation or more than the problem solving. It is just that the money is flowing from the new people to the earlier people, and that's where we need to be avoiding it. Some of the genuine multi-level marketing schemes or the businesses, they work on the value generation as well, apart from the referral schemes that work. So we need to be watching for these kind of things. For example, like one of the this one, why the name Gain Bitcoin, run by Amit Bhardwaj, had 7 primary recruiters, and they were running all this, and they actually collected more than 500,000 Bitcoin. And obviously, over a period of time, again, it turned out not so good for the investors. So these are the things that we need to be watching for, and it definitely is going to help a lot for all of us in order to safeguard our funds. Now let's come on to the next news. Probably this one is like the Binance exchange actually froze $1 million of corporate account due to law enforcement requests. Basically, the crypto exchange accused Tezos Tool contributor. It's a group, and basically they were accused of misleading the community by claiming that Binance blocked access. That's what the Tezos Tool community claimed, that they are not aware why Binance blocked their more than $1 million of funds out of nowhere, and people should be cautious of Binance. That's what their claim is. But then Binance claimed back that the group or the Tezos firm very much knows that why they have been blocked, because they were asked by the law enforcement agencies to freeze the funds for now because of some of the probably anti-money laundering or some of the things related with that. So that's what the thing is. Probably another thing that we all need to be watching for and looking for, that we should not be putting ourselves into a situation where we are trying to deal with the things illegally, or probably trying to launder the stuff. It would not end up well, probably at any level. As the regulation keeps on growing within the crypto space, you are going to face the freeze or probably some of the unexpected consequences. Try to be as genuine as possible. Now, another thing, the news that we all need to be aware of, probably, I have also covered this in one of my videos. Again, guys, if you have not subscribed to our channel, please ensure that you hit the subscribe button. This channel is everything about how do we grow your finances. That's what the goal of this channel is, to provide financial freedom to all our subscribers. Ensure you hit the subscribe button before proceeding. A lot of people are thinking the Ethereum merge is going to significantly reduce the gas fees or improve the transaction speed. Well, that's not true. And obviously the foundation has clarified it as well, and I've covered it like in our previous videos, very much this fact. The most important change that is occurring is transition from proof of work to proof of stake for the mining of for the blocks to be formed. And the most important impact will be the network's energy consumptions will be reduced by an estimated 99.5%, as well as the new Ethereum coming into the space will be reduced by 90%. So if Ethereum is going to become a deflationary asset, as well as a giant energy consumption will be reduced via this. However, for the speed to be decreased or the gas fees to be reduced, the next thing awaited is the Shanghai upgrade. That is probably, let's say, a year down the line will be happening. That is when it is going to happen. Not for now. That we all need to be aware of. Then comes probably last but not the least, one of the hacker was trying to exploit a bridge protocol and fails miserably. So apart from all the news that we have been hearing that the hacker has stolen this much $1 million, probably $50 million, $60 million, $1 million, we have been consistently hearing that. But here is the case where hacker himself lost 5 Ethereum. Why? Because the network it was trying to hack, it had this, Aurora Labs is the network, and the CEO of the network told the story that the hacker who attempted to exploit the Rainbow Bridge but ended up losing 5 Ethereum, around $8,000 at the time. The reason for that, because they had this pre-requirement set that the user need to deposit 5 Ethereum safe deposit, and that's when he was expecting probably the team would not be active during the weekend, and then he can proceed with the attack. But within 31 seconds itself, the attempt was suppressed, leading to the hacker losing their safety deposit. So that's quite a good news coming. Why? Because every time we are hearing this firm lost this much, the hackers stole this much. For the first time, like, probably, yes, it might have happened several times, but this is also one of the things that hackers need to be aware of. Even they can be losing if they have the malintention. So guys, that's it for the video. I hope that you found it helpful. And again, guys, please ensure that you hit the subscribe button, smash the like button for the YouTube algorithm, and comment down below for what do you feel about the Ponzi schemes thing. What do you feel about the Fed statement, where the Bitcoin is heading next? I would like to read each one of your comment. And till then, I'll see all of you guys in the next video. Bye bye.